What's going on, everyone? Charlie here. We're going to take a look at DTC 2021-014 backtesting charge clarifications. Now, first of all, thank you DTC for fixing this. I've been waiting 12 whole days. I guess I should have reached out to you earlier because the same day I reached out with an email, all of a sudden it got magically fixed. So, go you. Anyways, let's look at the purpose of this filing. This was filed all the way back on 11/18, but I haven't been able to report on it again because of the problem on the website. But clearly that's fixed now. NSCC is proposing amendments to the rules that would provide additional transparency into the calculation of the backtesting charge by clarifying that such calculation does not include amounts already collected from a member as a backtesting charge. Well, that should be self-evident, right? But nope, in legalese you have to have it in writing, so I guess they're sealing loopholes. NSCC is not proposing to change how it calculates members' backtesting coverage or any applicable backtesting charge, and is proposing only to include additional transparency in the rules in describing those calculations as described in greater detail below. Now, as part of its market risk, we're taking a look at the overview of NSCC's clearing fund and the backtesting charge. As part of its market risk management strategy, NSCC manages its credit exposure to members by determining the appropriate required fund deposit to the clearing fund. So each individual member has its own required fund deposit, and this backtesting charge we're discussing here is simply a component of that required fund deposit. Now, the required fund deposit, think of it as each member's margin. The objective of a member's required fund deposit is to mitigate potential losses to NSCC associated with liquidating a member's portfolio in the event NSCC ceases to act for that member, and herein referred to as a default. The aggregate of all members' required fund deposits is the clearing fund. So all the clearing fund is the aggregate, or each individual member's required fund deposit put together. That constitutes the clearing fund of NSCC. Now, NSCC would access its clearing fund should a defaulting member's own required fund deposit be insufficient to satisfy losses to NSCC caused by the liquidation of that member's portfolio. Now, pursuant to the rules, each member's required fund deposit constitutes of a number of applicable components, each of which is calculated to address specific risks faced by NSCC. We just saw an increase to this not too long ago. So again, they're still making changes. Let's see what's going to happen next. Now, NSCC employs daily backtesting to determine the adequacy of each member's required fund deposit. They're basically backtesting their required fund deposit amount. Now, NSCC compares the required fund deposit for each member with the simulated liquidation gains and losses. They're simulating liquidations for gains and losses using the actual positions in the member's portfolio and the actual historical security returns. NSCC investigates the causes of any backtesting deficiencies. As a part of this investigation, NSCC pays particular attention to members with backtesting deficiencies that bring the results for that member below the 99% confidence target. That's an extremely ridiculous target. 99%? Must be real easy over on the casino side. If you got a 1% margin of error you have to stay above. Jesus Christ. All right, anyways, so let's start over. As a part of this investigation, NSCC pays particular attention to backtesting deficiencies, and particularly to members with backtesting deficiencies that bring up below that 99% confidence target, or greater than 2 backtesting deficiency days in a rolling 12-month period, to determine if there is an indefinable cause of repeat backtesting deficiencies. Oh, I'm sorry, I'm an idiot. Identifiable cause of repeat backtesting deficiencies. So they basically investigate to look what's causing this. NSCC also evaluates whether multiple members may experience backtesting deficiencies for the same underlying reason. Interesting. Now, the backtesting charge, as described in section IB3 of Procedure 15, may be an additional component of a member's required fund deposit that NSCC may assess at either the start of the day, referred to in the rules as the regular backtesting charge, or on an intraday basis, the intraday backtesting charge. More specifically, NSCC may assess a backtesting charge against any member that has a 12-month trailing backtesting coverage below the 99% backtesting coverage target. If assessed, a member's backtesting charge is generally equal to the member's third largest deficiency. When calculating the regular backtesting charge, and 5th largest deficiency when calculating the intraday charge that occurred during the previous 12 months. As described in Procedure XV or 15, NSCC may adjust the backtesting charge if it determines that circumstances particular to a member's settlement activity and or market price volatility warrant a different approach to determining or applying such charge in a manner consistent with achieving NSCC's backtesting coverage target. Yippee-yay, making sure they're getting all their horses and eggs and ducks in a row to make sure they survive whatever's coming, right? I mean, that's what it looks like, or they're closing loopholes. Now, NSCC calculates the backtesting charge monthly, and based on those calculations, may either impose a new backtesting charge or remove an existing backtesting charge, or it may either increase or decrease a member's existing backtesting charge as necessary to maintain the target backtesting coverage. So you can do whatever you want with it. Increase it, decrease it, as long as you're good, do whatever you want. When calculating a member's backtesting coverage for purposes of the backtesting charge, and when calculating any applicable backtesting charge, NSCC does not include amounts already collected from that member as a backtesting charge. As described above, the objective of the backtesting charge is to increase required fund deposits for members that are likely to experience backtesting deficiencies. Here you go, buddy. Take this cushion. Sit on it. Isn't that nice? By an amount sufficient to maintain such members' backtesting coverage. So if you fail behind, don't worry. We'll wipe your ass. Oh, man. By excluding the backtesting charge in these calculations, NSCC is able to more accurately evaluate members' historical backtesting deficiencies and coverage ratios to determine if any adjustment to a member's backtesting charge is appropriate. NSCC is proposing to revise Section 1B3 of Procedure 15. We're looking at the changes now. And basically all they're doing, they go on and tell us again how a backtesting charge works for some reason. It says, currently, Procedure 15 does not state that NSCC does not include amounts already collected as a backtesting charge from a member in calculating either that member's backtesting coverage or calculating any applicable backtesting charge. Therefore, they're basically clarifying this by saying in the rules that they will not include amounts already collected as a backtesting charge. So this is what I think is going on. They have been collecting backtesting charges that have already been submitted, and they either got busted by Gary or they realize it's a problem, and now they're specifically putting it in the rules so that people can no longer do that. That's what it seems like to me. That's what would make sense from a legalese perspective. In essence, NSCC clearing fund is a member's margin, or is an aggregate of all members' margin. The required fund deposit is the individual margin requirement for each member. We have backtesting charge, that is an additional component of required fund deposit that may be assessed if a member needs an adjustment because they don't have their shit together. Now, they're basically clarifying that NSCC will not include amounts already collected as a backtesting charge from the member. The only reason they would include this in the rules is because people have been doing it and they need it to stop. That's DTC-014, and yeah, we know, man. We know. No one's enforcing the rules. We know. See you in the comments, bud.